Hey everyone, welcome to the DeFi Scoop, your inside scoop into everything DeFi. I'm your host, Dave Liebowitz, and in this episode, we have my former colleague, the founder of Frax Finance and Everipedia, Sam Kazemian. Here we go into everything from algorithmic stablecoins to what makes them tick, why they will work, to NFTs. He talks about some of the NFTs he likes, what he's collecting, what makes NFTs tick. And we also get into what it takes to be a builder in crypto and DeFi. So stick around. This is a really good episode. Lots of good conversation. I will be making more of these things. So if you like what you see, please like, subscribe, and we'll keep going. And thanks. So enjoy. Hey everyone, welcome to the DeFi Scoop. I'm here with Sam Kazemian. Sam is the founder of Frax and founder of Everipedia. Sam, how are you doing?
I'm doing great. Thanks for having me, Dave. It's always fun.
Yeah, and I'm not sure if you noticed, but I am wearing the classic Thug Wikipedia shirt. Bro, they don't even make this shirt
Nice.
anymore. Fun fact, if you go to thugwikipedia.com, it redirects to Everipedia.
Those are the good old days, right,
Like,
Dave? It would have been an NFT if we could have made it one.
yeah, for sure. Yeah, but you guys are making NFTs at Everipedia. And I actually recently brought the Juicy J NFT. I thought that was a really cool collab you did.
Nice, nice. Yeah, that was actually one of my favorites. We had the first election results hashed and put on the blockchain with the Associated Press. That was a NFT that we did. It was actually our first one. I think it sold for about $200,000, which was very very cool success. And we're doing a lot of collaborations that are really popular, but more like sets now instead of kind of one-off historic kind of things, because I think more people can participate. So it's been going really well in the NFT department at FPD.
Yeah, for sure. Yeah, how could I forget the presidential election one? Like that was really exciting. While I was at Everpedia making that happen, like we were honestly a part of history there. The first election with the race calls called on chain. So like that was just
Yeah,
like a
that
great
was
effort all around. Shout out Dwayne
that
from
was
AP. But yeah, I was gonna ask you, what do you think makes an NFC valuable per se, as compared to the traditional art world? Like I know you're a big collector of NFTs. I've seen, you have like a punk, you have a couple of hash masks. Like, what do you think makes an NFC unique?
Yeah, I mean that's such an open-ended but good question that I think like that that answer itself is as kind of as complicated as asking someone like what's the meaning of the universe, to be honest. It's like there's
Honestly, you're
so
right.
many. Yeah. So like I think, well, at least for me it's difficult to say, but at least for me it's a combination of historic kind of collect historic collectability, aesthetics, and kind of uh, withstanding the test of time of it being a prominent thing. But then also just some NFTs, like I like sewer rats. They're new, like these Avatar Project ones. I just like their aesthetics a lot. I don't know, how big or small or whatever it'll remain. I just really like them for the art. So
You
there's
just like the
different
rats.
different. Yeah, I just like the rats, literally.
Yeah, for sure. I think what makes a NFC, especially with crypto or with blockchain, is like how it uses blockchain itself. Like I think what made AP really cool was it was the first time stamped election, and so like you could like see the election on chain, the results on chain. It was a very unique and historical significant piece. I think the Juicy J ones are cool too because in a way like it's the same thing. When I was like looking at the properties of the music video one of the Let Me See one, it was like the date of the music video. You had the brain chain logo and stuff. I like the way it incorporates crypto in it. So I think the NFTs that incorporate crypto are the ones, or like incorporate blockchain somehow instead of just slapping a piece of art on and calling it an NFT. I think those are the ones that seem like they're going to succeed.
Yeah, definitely. Like I said, I think there's some element of like historic historic Lindy effect, so to speak, on it.
Mm-hmm.
But then also, one thing I learned is it does need to have a crypto native element, and it doesn't have to be only crypto native. But to be honest, like I think the best NFTs do, respect the fact that this is a crypto native environment. So you kind
Yeah.
of have to have some kind of real use of the tech or some element of it.
Even like for NFTs that are historically significant in just being NFTs, whether it's CryptoPunks, considered like the first NFTs, kind of the gold standard NFTs, or I think Mooncats are super cool. Like the whole story behind Mooncats, how it was just an archaeological dig, and a bunch of people started minting it from the contract. I minted some from the contract. That was a lot of fun. They're just they're just fun. Yeah, they're just fun, basically.
Yeah.
Yeah. But outside of NFTs, your main project is Frax, which is an algorithmic stablecoin. And algorithmic stablecoins might be, or actually, no, I think they definitely are the most hated aspect of DeFi. They're because you know they're hard to pull off, and we've seen a lot of disasters. Like majority of algo stablecoins, not only do they not work, but they fail spectacularly. Like you look at the early ones like ESD or DSD, they haven't gone back to their peg. You look at Iron, and how that it just exploded magnificently. Went from being mentioned by Mark Cuban and opposed to just it was even covered in Fortune, like in Forbes and stuff. That whole fiasco. So why are algo stablecoins hated so much?
Yeah, I mean, I was actually just on a blockchain debate podcast defending algo stablecoins, and um, they're easy to hate, right? I mean, first of all, I usually like to define, concretely what I actually think of as algorithmic stablecoins, because it's just so easy to kind of have this mushy definition that's very hard to actually pin down. So my own definition of algorithmic stablecoins is literally a on-chain decentralized stablecoin that's price stable and has the same trust guarantees as something like Bitcoin and Ethereum. So what that means is it has to not have custodial risk. It has to not, have any of these things that it needs to run on, centralized oracles or addresses or centralized custodial collateral or anything like that. An algorithmic stablecoin is something that is basically entirely on chain. It's almost like a price stable Bitcoin or Ethereum. That's my definition of an algorithmic stablecoin. So that's what I clearly define as it. And obviously, we don't really have those. I think obviously Frax will be the first one, but I don't think we have those. So it's really easy to hate on that.
Yeah, like you were saying, well, because right now the vast majority of stablecoins are just fiat backed. They're basically backed by either like dollars or treasury notes, or they're supposed to be backed by those in a bank. And they really underpin all of DeFi. And honestly, I don't think crypto would be where it is today without stablecoins. They were a big part of the run in 2017. They're a big part of the run now. Why do you think algo stablecoins can be pulled off?
Yeah, I mean, first of all, I think stablecoins as an asset class are 100% one of the biggest, if not the biggest, after crypto volatile assets themselves. Like that's one of the most important things that I think of. Second of all, it's difficult to explain, but in an abstract sense, I just think algorithmic stablecoins are kind of like uh, modern monetary theory, but on chain in an automated form, right? And so
Mm-hmm.
one of the things is that I don't see why that is impossible. Like just logically speaking, I don't see why that's impossible. I think the execution of it is extremely difficult. I think everyone that is thinks they're geniuses on Twitter that is like, oh, this will like never work and blah blah blah, and they think they're really smart and stuff, but all of their critiques and things like that are just the most mundane and least original things that anyone can think of. I think those people don't know what they're talking about, and they just feel really really cocky about being able to point to really low quality projects and be like, see, look, I'm right. I'm smart. Algo stablecoins don't work. But every day that Frax holds its peg perfectly, that like it already has, and it grows and it gets bigger, it's a counter example and counter data point to everyone else. So it's pretty cool to really just go against the narrative that it's not possible.
Yeah, people definitely have like a certain excitement and a certain glee when they dunk on algo stablecoins because it's just so easy to dunk on. Like most of them have failed, but Frax is out. You guys launched in December, and to this day, Frax hasn't broke its peg, which is really amazing because not even centralized stablecoins or DAI can say that.
Yeah, I mean, obviously, in the interest of being fair, DAI is much older than Frax, so
Yeah,
I think if we have like a at least 1 year or more history of holding the peg perfectly, we can then kind of maybe dunk on DAI a little bit,
yeah.
but DAI has worked fairly well, and recently actually they've started using a lot more USDC, which has gotten them some heavy criticism, but yeah, Frax has held its peg perfectly for over 6 months now, going on 7.
Yeah, I remember when we used to live together when Frax was in its basic ideation phase, and you were watching Rob Schiller videos about economics and trying to get like get a background and get kind of more context of like, okay, like if an algorithmic stablecoin were to be built, what would it look like? How would it function? So in those like early few years, because Frax has really been in development since 2018, like what went into it intellectually? Kind of like what is the intellectual kind of context and background of Frax, and like what did you use to inform yourself, and like how did it evolve over time in those early few years?
Yeah, I mean, well, you really have seen the whole timeline from really ideation. To be honest, it was just an idea, 2018 and 2019. Just really starting out as kind of a glimmer in my eye, so to speak. But
Hmm.
heavy development really began in early 2020. So that's in terms of code and finalizing the specs and the white paper and stuff. Um, so yeah, I mean, it just goes to show like I always had and did have a very deep interest in uh, DeFi and stablecoins even before the word DeFi was actually a thing, right? And so I thought that this area would be absolutely huge and the center of crypto. It's good to kind of feel kind of vindicated.
Yeah, for sure. So what is the secret sauce that makes a good algorithmic stablecoin?
Oh, that's an interesting question. Well, I think the real thing is kind of what Frax employs is that uh, one of the first premises that we started with was that there can't be 0% collateral. Now it's like everyone's come to their senses after Frax, right? And people know that okay, all of these early ideas of like basis, signer shares, and stuff with zero collateral, with just the kind of share or governance token being the entire thing that's supposed to stabilize the money supply is complete nonsense, right? It's just a complete incomplete system. It's just completely uh, out of left field. It doesn't work, and now we have data for it. With Frax, we actually named it after our idea of fractional algorithmic stablecoin. And so the whole point is it's a hybrid model, and the collateral ratio dynamically adjusts based on the actual price of the stablecoin. So the point is that every stablecoin, whether it's a central bank and it's a traditional sovereign currency, if you think of the currency as a stablecoin or a stablecoin protocol on chain, they need a balance sheet, right? They need collateral. They need capital to be able to manipulate and conduct monetary policy. So that's the first main thing that we realized, that if there's ever going to be any kind of algorithmic stablecoin, it's going to require a balance sheet to exist. So that's why Frax basically has a fractional approach. We call it the first fractional stablecoin. And I think now everyone's really from one way or another has understood that, right? All of the other algorithmic stablecoins in the space are kind of variations and flavors of this theme, where the idea is, hey, we have some collateral, or an phase case, which is another interesting project, is we have some liquidity, and it is essentially backing Fay, or essentially keeping the price at peg, but it's not one to one, right? There isn't enough liquidity if everyone were to come and sell the stablecoin, that it wouldn't be possible to get $1. The same thing with Frax's fractional reserve is, if everyone came to basically redeem Frax just for collateral, unless the collateral ratio increases, and then which it does reflexively, but in an instant, there isn't enough collateral in moment in time for everyone. So the ideas are the same. I think we really pioneered the concept of, you can have an algorithmic system that doesn't necessarily need to be one-to-one backed. And I think that's how traditional, central banking and stuff actually works, with a balance sheet that is not over collateralized with the nation's currency, right?
Yeah, of course. I was thinking about this recently. Would you say, when for the longest time, a lot of currencies were just backed by gold, or they claimed to be backed by gold? The U.S. only got off the gold standard technically in 1971. Is that a good Is that a fair comparison to say that the U.S. dollar is kind of hybrid collateralized by gold, and then in a way, when it became fully fiat, it became algorithmic in a sense? Is that a stretch to say?
No, I actually like that view, right? And so something I actually say is even the dollar wasn't an algorithmic stablecoin until Nixon pulled rug the gold, right?
Exactly.
Right. So the cool thing about Frax is it's all algorithmic and on chain, in the sense that everyone can see the collateral ratio if it's going up or down. Everyone can see what the reserves are, and they can make free market decisions of whether to hold the stablecoin, to use it, to sell it, to get rid of it, whatever they want. And if the collateral ratio does go down slowly and it becomes more and more algorithmic, that just literally means, by definition, that that's what the market is okay with, and what they want, right? Because every part of this is on-chain, public, and by market forces, right?
Yeah, for sure. And so Frax, I'd like to think of Frax 1.0 is that the hybrid model you talked about, just with the collateralization ratio, as confidence increases, the system expands, the ratio goes down. If the system contracts, it goes up. So that was really the first AMO, and now Frax is a whole host of AMOs. So can you define what an AMO is, and some Frax AMOs that you have deployed right now?
Yeah. So basically, what we invented for Frax V2 was these things called algorithmic market operations controllers. And so the idea behind that is essentially, if you think of an algorithmic stablecoin, it's essentially, like I was saying, modern money theory, which means that you can increase and decrease the money supply to change its purchasing power and its value, right? And the whole point here is that there's a lot of things in DeFi a stablecoin can integrate into, right? And for example, Curve, Uniswap, lending on Compound, Cream, and all these things, right? And the important thing is, we realized you can algorithmically create integrations on a protocol level with all of these protocols, and essentially expand and retract the Frax supply literally into and out of these protocols. So I'll give you an example. We have a Curve AMO, which basically is for expanding and retracting Frax supply into our Curve pool. So for example, if you have this Curve pool that has a lot of 3 CRV tokens, so the price of Frax is actually over $1, right? Frax, let's say, is $1.01 in this Curve pool. Then the protocol actually mints more Frax into it to even the price right back to $1, right? The AMO actually prints Frax. Yes, out of thin air is a lot of what people like to point out, but it prints money and it places it in the pool to stabilize this price back to peg, back to exactly $1. And what it does is it gets Curve LP tokens for that, right? So let's say in this example, it prints 5 million Frax, places it in the Curve pool, it gets 5 million Curve LP tokens. Then now the price of Frax is restored in the Curve pool algorithmically. This doesn't require governance votes or anything like that. The whole point is this is decentralized and automated. And then let's say the other way, right? Let's say now people are selling Frax into the Curve pool. People want other stable coins, and let's say the price of Frax is now 99 cents instead of $1.01, right? It's under the peg, right? And now what's interesting is the AMO can do the exact opposite of the market operation before, right? It has 5 million Curve LP tokens that it had from depositing the Frax expansion before. What it can do now is it takes its 5 million LP tokens and it redeems 5 million Frax, right? And it takes the Frax and burns it, right? It retracts the supply of Frax in the open market by 5 million, by what it actually had printed before. And so this contracts the supply of Frax, right? Then it should raise the price of Frax up from 99 cents probably back to close to $1 in the Curve pool, right? And so these kinds of expansion and retraction modules, right, we call them AMOs, can be deployed kind of anywhere to keep the Frax supply properly expanding and retracting at peg. Like, for example, we could build a lending AMO that literally mints Frax into Cream, for example, and allows people to borrow Frax directly from the protocol, but by paying an interest rate in the Cream protocol, for example. Or if we get on Aave or Compound, we can build lending AMOs for those. And then to retract the supply when the protocol needs the borrowers to stop borrowing and start repaying, the protocol will take out a lot of the Frax that it had minted in there, thus increasing the interest rate, right? And basically pulling the Frax in there so that people have to pay higher interest rate that have borrowed the Frax and be inclined to return their debt, right? To take the Frax out of the open market and repay their debt. So you can expand and retract the supply through these AMOs in a really interesting way. And so far they've worked great, and we've really grown a lot with all of these AMO integrations, and we have a lot of them. So I think this is also another very unique and interesting thing that we've kind of developed.
Yeah, for sure. I think of AMOs, especially the way that you described it. They're basically tools to both either help stabilize the peg of Frax like Curve, or expand the use of Frax like the lending AMOs. And the more AMOs you have that do that, basically like the more confidence that grows in the system. Is that like a fair way to describe AMOs?
Yeah, I would definitely say so. I think so.
Okay, cool. And most recently, you launched the Convex AMO, which sounds really cool. Like, I haven't looked into Convex too much. I've seen there's definitely like a little competition, it seems like, between Convex and YFI. I saw a tweet from Rex today called the Curve Wars. They had like a really cool GIF about it and stuff. So could you both describe like what the Convex AMO does, and you give more background for me, because I'm like not sure like what the Curve Wars are really about. It's really like from what I understand, I guess it's a game for more VCRV, right? So Convex AMO, like how does that work, and like how does kind of these Curve Wars work in general, and how does like Frax benefit? How does Frax benefit from the Curve Wars if it does benefit?
Yeah, I mean that was a really cool Rex article. I would recommend people read it. It was actually very well researched and talking about the three big protocols, Wire, StakeDAO, and Convex, that are basically fighting to accumulate CRV tokens and stake it as VECRV. That essentially allows them to vote for Curve cages. It's actually important to note, we actually have a similar mechanic coming out for Frax called VEFXS gauges, but ours is based on algorithmic stablecoin expansions instead of just DEX swaps. But to go back to it, yeah, the Convex AMO is really cool because it's a modification and add-on essentially to the Curve AMO that I just talked about. So, for example, going back to the example where the protocol mints 5 million Frax to bring the peg to $1 and then get 5 million Curve LP tokens. Well, before, the Curve LP tokens might have just been sitting in the AMO address, for example. And now for the Convex AMO, for example, the LP tokens get put to work by staking them in Convex when the peg is sound at $1, right? And so Frax is obviously perform extremely well. So most of the time there needs to be very little retraction of supply. So most of the time those LP tokens can be put to work earning yield, right? And so we deposit those through the Convex AMO in Convex. And we have one for StakeDAO. We have one for Wirearn's CRV Frax Vault. And the idea behind that is, well, if the protocol is printing Frax to stabilize its supply, it can also programmatically deploy them places and earn yield on it, right? And that's actually eventually goes back to FXS holders because of our feature called FXS 1559, which burns half of the profits and sends the half of the yield to the FXS stakers. For the Convex AMO specifically, we're actually holding on for now to the Convex tokens and not selling them immediately because we think that the protocol having a say in these big protocols itself through kind of meta governance by other FXS holders is very important. At the end of the day, the yield and the CVX tokens and everything these AMOs earn go back to FXS holders, right? Because they either decide how to use them or how to vote with them or things like that, or to sell them to burn FXS and give the yield back to the FXS staker. So at the end of the day, all this value goes back to FXS holders. For now, we're actually investing in kind of the long-term outcome of the Curve and DeFi ecosystem by not being a net dumper of these tokens, which we think are really, really good.
Yeah, that could really, benefit Frax and make Frax really powerful one day, just holding on to these tokens of these solid projects. And like you said, with meta governance, like having a say in the future direction of them. It's basically Frax is kind of like like its own party, like its own political party in a way. And the Frax holders are like part of that party, and they get to choose the direction of like where do they want these protocols to go in the future.
Yeah, and the other thing that's important to point out here is that Frax is supposed to be an algorithmic stablecoin, and so like I described, it lives entirely on-chain, right? This isn't a fiat stablecoin, and this isn't like a private company. It's a totally decentralized, DeFi protocol. And what's really important is we, as like a project, are in it and aligned in incentives of the long-term growth of the DeFi ecosystem, right? Like, for example, right now, one of the largest farmers and dumpers of Convex token and CRV tokens is Alameda Research, right? SBF and the FTX guys. They dump, they're farming this stuff with like 600 million plus dollars of TVL, and then they're just straight dumping it immediately for ETH, and then probably selling the ETH for cash because they want to spend on big flashy stuff, right? Like the FTX partnerships with Tom Brady recently, and then the Miami Stadium and stuff. They're a private company, right? And they want to build their off-chain image, right? They want to build prestige, and so they're actually in an odd, peculiar way. Short term, they're short, right? The success of DeFi, and long their prestige. Short term, right? Obviously, you can make the argument that it's bad for crypto if they dump all these things just to take pictures with Tom Brady or something, right?
Yeah.
But like But the thing is, and I really want to highlight this because this is very important for everyone listening, is like Frax needs to grow and be symbiotic and have interests aligned with all of these on-chain protocols that integrate us, because we want to be kind of the stable coin of DeFi, the algorithmic, Fed, so to speak, right? Of on-chain stable coins, right? And we can't do that if all of the protocols know Frax is, they just expand the supply and then they dump our token and stuff, right? What would be the point of that? We have a extremely symbiotic and aligned incentive with every single protocol that integrates us and builds us into their system, and we build an AMO in their protocol to expand Frax supply into, which literally means print them free money, right? into their protocol, like literally. Yeah. And so that I can't stress that enough. We are as symbiotic as you can possibly get with every DeFi protocol. So people, listening and considering integrating Frax, it literally pays, printed money right, literally to integrate us, and we don't dump and farm and dump tokens, right? Like we're not SBF in the sense that Frax is not a private company, right? Frax is an entirely decentralized protocol owned by FXS holders, token holders, on-chain people that develop it like us and volunteers and stuff. And we don't have an incentive to wreck the protocols that literally just integrated us, right? Like why that doesn't even make sense, right? There's no economic interest. In fact, we have an economic interest in growing all of the protocols that we've built an AMO for, right? Yeah. Like what would be the point of wrecking like Curve or Convex, right? Yeah. We actually want them to become bigger, right? So we can continue our AMOs and they can expand money supply and stuff, versus, these semi, bad actors short term, but long term, obviously pro crypto, where it's like you are literally just industrializing the dumpage of these coins. And sure, it's obviously a free market, so I'm not trying to say anything bad in the sense that it's unethical or anything. It's totally fine, but it's just short term. It's in the wrong side, right? And so the thing I want to stress is Frax is always on the long term and the right side, short term and long term.
Yeah, I actually haven't thought about that before, how Frax's interest long term really aligns well with the protocols that it participates in. That I think that's something really important to highlight, because I feel like a lot of people have kind of a negative assumption of people that farm and participate in these protocols. I feel like people just assume that they always dump, whether it's, Alameda or like another protocol or something like that. And that leads me to my next question. So Alameda, yeah, they have a business to run, and it's in their interest to, farm and sell these tokens, which they use to fund these operations and get these partnerships. Like, what do you think are the cultural kind of consequences and ramifications of FTX going out and getting all these partnerships, whether it's in the MLB or with Tom Brady or with Miami Heat naming the stadium? Like, they're really, getting into culture in ways I think a year ago no one could imagine. No one could imagine an exchange going out and, doing all this. What do you think are kind of the ramifications of this? Do you think this is good for crypto? Do you think the farming and dumping of tokens short-term benefits kind of the cultural impact of these partnerships long-term? Because these people are going to see FTX for decades.
Yeah, I mean, so let me be clear. I'm a big fan of FTX and SBF and stuff. They're like you said, pushing the culture and bringing crypto mainstream to be a household name. So like I totally think that's cool, and I'm a big fan of it. And what I wanted to highlight, which is subtle but it's important, is Frax entirely lives on chain. We actually we don't focus on consumer culture, or you're not going to see like Frax, sponsor Miami Heat or whatever, and things like that, because that's irrelevant, right? We want to be an on-chain algorithmic stablecoin. Our decentralization and our crypto centered ethos is the most important, right? Like you don't see Vitalik trying to buy the stadium or something like that. I'm pretty sure
Ethereum Arena.
Enough money to, yeah, I'm pretty sure that he has enough money to do single-handedly some pretty crazy things, right? And it's just out of his scope. He doesn't care. It's not something that interests him, right? What I want to highlight is Frax exists entirely on chain, right? And so every protocol that integrates us, we're essentially hand in hand long them, right? And so it's kind of like, it's kind of, if you think of it from Convex's perspective, right, their token is getting absolutely crushed in terms of sell pressure for the pleasure of FTX expanding crypto culture outward, which is great for all of us, except, to be honest, probably not Convex, right? If someone was like dumping FXS tokens, Frax share tokens, right, and was like contributing to the absolute like downward pressure of systematic price decrease of like FXS, and then they said, but listen, like it's so like Tom Brady can like wear my exchange's logo or something. Trust me, it's good. It's good. We want, like, I still wouldn't do that, right? I'd be like, no, go like figure out some other way rather than completely dump on my project systematically, right? So it's not good for Convex, right? I think Convex is getting the raw deal, right? But like it's good for everyone in terms of like a grand crypto thing. So I'm a fan of obviously everything they're doing. And again, it's not like what SBF is doing is unethical. It's a free market, right?
Yeah.
So I'm not attacking in terms of an ethical way. I'm bringing it up because I think it's really actually an important indicator for Frax that any protocol that integrates us can only gain. There's no place where Frax literally can gain and the protocol like loses, whether it's short term or long term. So it's actually just like a very virtuous cycle for every protocol that integrates it. So that's the important thing.
Okay, I see what you're saying. You're using it as a comparison, and I think we're both in agreement that the FTX, like going out doing all these partnerships and brand kind of deals and stuff, is a net positive for crypto. But in terms of the AMOs, what future AMOs do you have planned at Frax?
Yeah, so obviously we have a lot of projects that are really interested in talking to us, right? Like how could it not be bullish for anyone that wants to integrate it and literally get money printed, right? And and so right now, actually, one thing we're doing is Iron Bank on Wirearn incorporated us, so we're probably going to do a lending AMO with them in the next few weeks, and then which basically mints Frax expansions there, so they can borrow Frax, pay an interest rate. Iron Bank doesn't require over collateralization because it's like Yearn, right? So they kind of get these under collateralized Frax loans, which is fine because it's Yearn, right? Like they obviously can take out 8-figure loans. For them, it's nothing, right? So we start earning interest rates on that. Other AMOs we're working on, we have a really cool one building around UniV3 that employs kind of like our gauge architecture that we're designing. That's coming out soon. Excited to talk about that when we launch it. So that's currently taking up most of our R&D.
Cool. Can you give any more details about the gauges in UniV3, or are you gonna hold off until it's completely finished?
Just a little bit of details is kind of, it's almost like curves gauges, but kind of on steroids in terms of it's very, very it's like if algorithmic stablecoin met curves gauges, and I actually think it's actually very symbiotic and value creative for Curve, because although the gauges will start on UniV3 first, they're actually agnostic to where they are, because Frax is an algorithmic stablecoin, so it have Frax gauges on anything, including the Perf pool itself. So we actually are probably going to expand to many different things after V3. But our debut will be on Uni V3 Frax gauges.
Yeah, cool. Speaking of expanding, do you see a future where Frax AMOs are not just on Ethereum, but maybe are on, rollups like Optimism or Arbitrum or chains like Polygon or Phantom or anything like that?
Yeah, I mean, we're already on many chains in terms of Frax is kind of chain agnostic and multi-chain. It just has its system contracts and everything on ETH1. That's where we think is the most secure to always be located. We're actually already on Phantom, Polygon, BSC. We're launching on Moonbeam, which is a Polkadot EVM chain soon, and we're super excited about that. We're definitely going to be, hopefully, everyone, pretty much everyone. So I think that's going to be pretty huge. We're already working on something really cool on L2. For that one, I'm not going to say exactly what it is, but it's going to be really legit. I'm really. It'll also incorporate privacy features, so it'll actually allow sending of Frax pretty much like cash in terms of privacy.
It's really exciting to hear, because I remember several months back we wrote the Tornado Cash proposal together. So I wonder if it has to do with that. You don't have to say, we can like save it for like when it's ready or not. But I think privacy with transactions is really one of like the underlying ethoses of crypto, like being able to send in a private manner, but like still permissionless.
Yeah, definitely. I mean, it's going to kind of complete the L2 vision, right? Like extremely cheap transactions and fully private cash, right? And so like with the security of ETH1, it's kind of going to be the holy grail in terms of using something as an actual currency, plus combined with the fact that Frax is actually stable, right? So you get stability, low fees, L1 security, and full privacy. So literally pretty much everything.
Cool. So what are some of the biggest challenges you faced when, building Frax, whether it was in the beginning, in the pre-planning stages with the launch, or after the launch, and, it's been live for 7 months? Like, what are some of the biggest challenges and how are you overcoming them?
Yeah, I mean, I think the biggest challenge is basically there's no precedent in the space. So everything we're building, we're kind of inventing, and there's no one to kind of look up to, which is cool, and it just kind of shows that we're 1 or 2 steps ahead in the algo stablecoin space, which is great. But it's kind of like you have to actually invent everything as you go, like both in theory and in terms of the tech and in terms of the token economics and everything, right? Like for example, it's basically, if you're creating, for example, a new proof of stake chain, right? You have all of the proof of stake research and different attempts to draw from and stuff. With algo stablecoins, all we have to draw on is the stuff to not do, right? Because like Frax is the only one that's held its peg, and so like if we're gonna do something, we're like, well, hopefully, this is gonna work exactly as we hope, and almost all the time it does. We're not perfect, but almost all the time it always does. But there's no sure thing. Right? There's no one we can actually look at because no one else is out here.
Yeah, that sounds both exciting and terrifying at the same time, because you're carving this own path. You're kind of like, exploring this like unexplored Great West, and you're setting the standard basically with whether it's the AMOs or, your model, like the fractional model becoming like, hey, this is the model that works with building an algo stablecoin. But it's terrifying because you have really nothing. This hasn't really been tried before. I guess you can look in the traditional finance world, in the old finance world, see what worked there, and see like how that could be applied on chain, and like what you need to adjust to apply it on chain, because the dynamics are definitely different. But both exciting and terrifying, the algo stablecoin space and what you guys are doing.
Yeah, but it's exciting.
Yeah, mostly exciting. So another thing you had a tweet thread about was can you kind of summarize that thread and how that relates to Frax? Because you guys have talked about coming up with your own basically Frax price index, right?
Yeah, so that's a lot of stuff to unpack, but I'll try my best. Basically, I think the final stage of essentially algorithmic stablecoins are basically pegging to stability that is not the U.S. dollar, and so a lot of the newer projects kind of are thinking of that way, but they're not actually pegging to anything, right? Like Olympus, DAO, Rye, Float, all of these other projects that are headed by really smart teams. Most people forget that the dollar is actually loosely pegged and loosely tracks the consumer price index, which is the U.S. government's definition of the price of a basket of consumer goods that they basically define Americans as standards of living, right? Like rent, consumptive items like food. Let's see what else. Like there's a lot of them, right? Electronics and things like that. And this basket and indice is supposed to keep the actual relative standard of living the same across time. A lot of people, for example, wrongly say that everything is getting more expensive, which I'm not here to debate like the inflation narrative and stuff. I generally agree with it. But for example, they say, oh, look, like burger was like $2 or $1.50 in like 1970, and now it's like $5 in 2020. Like, yeah, but for example, they forget that minimum wage was also like $3, right?
Yeah.
And so was everything, right? When the nominal price of everything goes up in tandem, and I'm not saying that everything has perfectly gone up in tandem, but again, that's an inflation debate, right? But what most people forget is that the consumer price index actually makes sure that a lot of the items that define America's standard of living goes up or down together. So, for example, if a burger gets twice as expensive, minimum wage should be looked at and should hopefully start tracking to becoming twice as high, right?
Mm-hmm.
If, for example, electronics ends up becoming twice as expensive, then the purchasing power of the dollar should become more expensive or more valuable based on the weight of electronics in the consumer price index, right?
Yeah.
So that people's dollars can buy the same amount of electronics across time. That's the idea behind the consumer price index, and we can argue ad nauseum about whether it's working as well as it should or not, but the concept is very important because whether the dollar is as good as it can be or not, it is technically right now the best value of stability. It's the thing that 80% of global trade is settled in. It's the thing that everyone uses to talk about value. It's the SI unit of value, so to speak, right? And when people
what do you mean by, what does SI stand for?
System International. It's like meters, right? Like
okay.
Meters is the SI unit for distance. Joules is the SI unit for energy, right? And so like there's all these things, right? It's like and I just like to colloquially say there's no unit for economic value, right? There is for like distance, there is for like energy, there is for
diet with calories and stuff.
Exactly, right?
Okay.
I just like to call the dollar the thing that everyone internationally understands as the unit of value, right? Because it kind of is. So,
Yeah, that makes
and the
sense.
reason it is because it's kind of loosely tracked to things we care about, right? Like consumptive items, rent, right? Like food, shelter, and stuff, right? And so I think the next big thing in crypto is actually, if you want to fully decentralize and do away with relying on the dollar, uh, and entirely of that, you have to create your own monetary policy rather than just pegging to the dollar, right? And in order to do that, you need a crypto native CPI or price index, right? And so that's what we're trying to do with the Frax price index. We're trying to make the first crypto native price index that FXS holders can govern and essentially define, and projects can essentially peg to that, like how people peg to the dollar, which is kind of a proxy of pegging to the CPI.
Cool. Yeah, the whole CPI thing is, I think it's one of those things that more people should know about, but they don't. Like, I honestly didn't learn about this, what the CPI was, until talking to you like a few months ago. But it seems so important. I actually was thinking, like, it would be cool if they had a CPI for like common. I mean, there's like certain things in the CPI, whether it's like eggs or chicken or real estate. They should really put like Big Macs in the CPI, because I think Big Macs are quite an accurate. Even that might sound ridiculous, but Big Macs are kind of like an accurate representation of how much things go up in price. Like, what do you think should be in the Big Mac price? Yeah.
Kind of started as a semi joke, but in economics, and it actually ended up kind of being useful.
Yeah. What do you think should go into the CPI? Like, what do you think would make like the most accurate representation for like people to make, for policymakers to make the most informed decisions in that?
This is kind of really a difficult kind of conversation.
Yeah.
Basically, I think there's a lot of literature that can be read on this, but essentially, I think the fact that they don't consider real estate or college expenses and stuff in the CPI is pretty bad. They have obviously reasoning that sounds fairly all right. Like for real estate, they say it's an investment, it's not a consumer item. Rent, like shelter, is the actual consumer item, so we're just measuring the price of rent, which is like, okay, fine, but that makes Americans unable to own houses more and more, right? And so we're basically seeing home ownership become more and more difficult accordingly, right? Because they don't include it in the CPI, so logically you do see that exactly having a result, right? Because that's what the dollar loosely tracks, right? So, so yeah, I think that college education is not included, which is not a good thing. And I think real estate should, even though it's technically they're right, it's not a consumptive item, but I think it should be included in the CPI rather than these other, secondary price indexes.
Yeah, I guess I can see the logic with real estate, because even though like people buy homes, like people do use them as an investment, but at the end of the day, like people are living, whether they're renting or buying, they're living in these homes. They're doing the same thing. The majority of people are doing that. So I think I agree with you there that it should be included, and also it hasn't, like, whether like people use real estate as an investment or not, like it definitely has an effect on everyone else. I was watching a video recently about how investment banks now are getting into, or have been getting into, like the traditional real estate market over the years, and like you basically have these big banks becoming landlords, and not really, and these tenants are getting like living in horrible conditions, and they're not really taking care of the property, and it seems like we're taking like steps back compared to like 10, 20, 30 years ago, in terms of how easy it was to either own a home or comfortably rent somewhere. So I don't know. What do you think about that? I guess we're like steering away from Frax a lot now. We're just talking about like the economics of real estate and stuff. But I don't know. What do you think about that?
Yeah, I mean, it's I really don't like where that's headed, right?
Yeah.
I think that's getting to a real like price index and kind of a global, opt-in definition of stability that people can exit their dollars into that is actually stable,
Mm-hmm.
would fix stuff like that, right? I think a lot of the Bitcoin narratives like exit hyperinflating fiat and go into Bitcoin, it's a good investment and stuff. I do think Bitcoin is a good investment, but I think it's a very poor thing to plan your life around because it doesn't have stable purchasing power, right? You can make 10 times your money and then lose half of it, and then lose another half, and then 8x it again, and BTC had its most volatile 1 month in actually May, right, when it had $1 billion in market cap, which is absolutely insane, right?
That is insane, yeah.
Yeah, so I think that all of these problems with the actual CPI and current issues in the U.S. economy can really be fixed with DeFi.
Yeah. You mentioned Bitcoin being money. I want to get into that. What makes good money? Because you have Bitcoiners make the argument like, oh, like everything's going to be, priced in Bitcoin, or people are going to just transact with Bitcoin. Like that was the actually original kind of goal and vision when Satoshi like released a white paper. It literally says peer-to-peer cash. And then in the Ethereum world, you have the whole ultrasound money meme, and everybody putting the speaker in the bat, and people are saying, "Oh, ETH is money, ETH is money, ETH is money." And in a way, it has become money, especially whether it's in the NFT market or anything that's priced in ETH. So technically, it is money in these different economies. So, what do you think makes good money? Could Bitcoin and ETH become money, or do you think they should just kind of stick in their own lane and do what they're good at, whether it's like Bitcoin being a store of value, a very volatile store of value, but store of value, and ETH kind of being this, I think the proper term is like a triple threat asset. People use it for gas. In a way, it's a store of value, and then there's like something else that kind of escapes me. But yeah, what do you think like makes good money, and could Bitcoin and ETH become money, or should that just be reserved for algo stable coins or just stable coins in general?
Yeah, I mean, I think my own view of money or currency is something that keeps your standard of living constant. And I think that that's actually the whole point of the CPI, right? It's supposed to measure important consumptive items that part of a good life, right? Americans have come to expect, right? And the government keeps track of those prices. So currency is something that you can actually plan around. You can earn, you can save, you can be pretty sure that, if you have this much money, you can buy around this much of a home or this much of food, and you can be pretty confident that that's going to be the case next year and the year after that, and etc. Right? Now, if you think of literally what the definition of an investment is, it's exactly the opposite of that, right? If it's a good investment, you should be able to buy a bunch of houses that you can buy. You should be able to change your standard of living, right? You should be able to, answer the when Lambo question, right? If it's a good investment, it should change your standard of living. So investments are anathema to currency. That's my view. I don't think it's a controversial view when you actually look at how the dollar works, right, and how actual monetary policy is done. You could argue that monetary policy is done poorly, but the intent of it is to keep standard of living fairly the same across time, plus minus a inflation factor, essentially, right? And so that, I think, is my view. My view is that the currency requires it to be pegged to some standard of living. At the end of the day, that's what humans in meat space care about, right? And so that's why everyone still does their accounting in dollars. When stablecoins peg to dollars, transitively they're pegging to the standard of living monetary policy of the CPI and what the Fed does, right? But we can bring that stuff on chain, right? And that's what the Frax price index should hopefully be able to do.
Yeah, I think that's the most powerful part about Frax is how everything is on chain. And if you want to see, exactly like how much Frax is being minted, like if you want to see, the strategy of the AMOs. It's all public, which is really revolutionary and like really, can help keep the protocol accountable, which is, something that did not exist in the old and basically in traditional finance. Like I'm sure you remember like 10 years ago, or even like more than that, Ron Paul and the Fed like opened the books to that, like, and it's kind of funny, like in a way, like you're kind of fulfilling even though Ron Paul's against like central banks, you're kind of like fulfilling his dream in a way of like having everything on chain and everything accountable.
Yeah, no, I was a Ron Paul fan in college, so I definitely think that that's a compliment.
Of you in college, that's when you first got into crypto. Can you talk about how you first got into the space and what you were up to and like with your activities and whatnot?
Yeah, I mean, I first heard about like crypto and stuff back in 2013, which was a super long time ago.
Yeah.
And I started mining actually all the altcoins and stuff. Dogecoin was actually the first cryptocurrency I mined right when it actually came out, and I got really into it, and that's kind of how I first started getting into crypto in any sense, right? And now it's ages ago. That was during the first altcoin boom. So it's been fun, and never really did I think that the first crypto that I was mining in Dogecoin was accepted by Elon to go to Mars and interstellar travel, but here we are.
Yeah. How do you think, the crypto has changed since you first started? Like, what are like actually some common themes that you saw like in your first cycle in 2013, then in 2017, and then now? Like, do you see like a common theme in all of them? And like, what are some differences you see in them?
Well, I think crypto is, at least currently, obviously cyclical, although I think its cyclicality, as it becomes a larger part of the macro market, will just move with global trends rather than internally with like the next hot thing. So one thing I noticed is like crypto, there's some new technology that comes out, right? Like in the original altcoin boom, it was, changing and tweaking proof of work, adding extra features to these altcoin things and stuff like that. And in the ICO boom, obviously it was smart contracts, tokenization of stuff, ICOs and things like that. And then the euphoria kind of dies down to comes back down to reality, right? If you kind of look at the current cycle, I would say obviously the euphoria has clearly died down. I wouldn't say that we're in a bull market anymore, but notice how it's tough to say we're, totally bearish or something. It doesn't really feel that way. It kind of feels like people call it crab market. It's like sideways, right? I think that might actually end up becoming more of the trend because crypto is a 1 trillion plus asset class, space, and you don't really have, it's too big to be insular and just like, self-circular anymore. Its growth and its decline actually impacts macro trends, and then vice versa. Macro trends actually impact crypto's growth, and so I think that the cyclicality of it will kind of smoothen out now slowly.
Yeah, and another thing I noticed, because for me personally, like I first heard of crypto back in like 2010 when WikiLeaks started accepting it because PayPal banned them, and I'm just like, oh, what's this? And I really, you would always hear about it, but it's definitely like a big learning curve to like get into it. I was fortunate to be working at Everipedia in 2017, and we would like live together and you go on these like really long rants about crypto, and that's really how I learned about it, between that and like just watching videos on YouTube and just like being a part of the industry. So like that's how I got into it. And one thing I've definitely noticed is not how, even though it's becoming more integrated and macro trends and stuff, like in crypto itself, things are becoming less correlated. Before, I think because pairs used to be like just with Bitcoin almost exclusively, so everything would rise and fall with Bitcoin. But now what I find really interesting is you basically have the bull market is not one singular bull market. Like one area, like let's say NFTs, that could be in a bull market. Meanwhile, DeFi coins could be in a bear market, or dog coins and meme coins can be in a bull market, and other coins could be in a bear market. And things are a lot less correlated now. Like now you have these gaming tokens like Axie and Illuvium and Sand. Like they're definitely in a bull market right now, and they're getting a lot of interest. While a lot of things are crapping. So it's I guess in the future it's gonna be interesting to see like what areas within crypto are gonna like be in bull markets, and I guess it's up to whether it's speculators or developers and whatnot to like.
Yeah, I mean,
Yeah.
that's good, right? That's how
Yeah.
you actually build a crypto native price index, right? Because if
Yeah.
everything just moved together, then it would kind of be pointless, right? And you just have to track things outside of crypto. But if crypto actually is a diverse, uncorrelated global sector with different kinds of economic activity, where one sector is growing, another sector might be slightly in decline for the time being, another one is innovating some new things, you can actually track multiple of these sectors and actually have a stable kind of emergent crypto native currency, right? That keeps people's wealth across time, so they're able to do the things they care about in meat space, right? And homes or all this stuff.
Well, you just saying that really put let a light bulb go off in my head, because that's what like you said, that's what the Frax price index is about, is tracking the standard of living on chain, and like what will go into the standard of living on chain in the future. But we're kind of seeing the beginnings of it now. So I can see the Frax price index in the future. Like it may include Axie for representing the gaming part of crypto. It may represent some peg to Doge, representing the meme power part of crypto. It may include Bitcoin, Ethereum. Hell, it may even include like other like Litecoin. Or that will be up to the VFXS holders to decide. But that actually makes the Frax price index make a lot more sense, and like how it functions and stuff.
Yeah, exactly. I think that it's going to be really unique. I also think that the most important thing is the way we're designing this is that it hopefully should not have anything to do with needing oracles or like the oracle solution and stuff, which is already such a huge, multi-billion-dollar kind of thing that Chainlink is leading that and stuff like that. So a lot of things people mistake about the Frax price index is, oh, why don't you just use Chainlink to bring the CPI? And it's like, well, that's not at all what we're doing. In fact, if you want to do that, go do that. It's not going to do you anything, right? It's not like that's that much of a secret or something.
Yeah.
Right. And so So the thing with the FPI is it's totally unique, decentralized, on-chain, crypto native, and it doesn't require Oracle trust, right?
Okay, how does it not require Oracle trust? Because how I understand it, like I can see how it doesn't, because what does an Oracle chip do? It takes off-chain data and put it on-chain. But even though like the data is like all on-chain, how would the Frax price index get the prices? Wouldn't it need to get an Oracle? Like where would it get that information from?
Well, it would be from on-chain sources, right? So swap and other token prices and other economic activity that's fully on-chain. In fact, one of the cool things we're exploring with the FPI is like, if we wanted to have a global energy component, how much actually energy costs out in the real world, we could actually use Bitcoin proof of work difficulty as a proxy. And since
that's cool,
Bitcoin blocks doesn't require a oracle, right? Because you can actually just verify those blocks on chain within Ethereum smart contract. You don't actually need an oracle for
that. Oh, that is cool. I haven't even thought that's really smart. Well, that'll be interesting, especially now with the hash rate going down, because all the miners are moving out of China. Like if the Frax price index were to be live with that feed, That would be a really interesting dynamic, seeing how that would affect it.
Yeah, I mean, you got to normalize the difficulty against the market cap of Bitcoin, right? But that should get you a good energy component in the Frax price index, right? Because if Bitcoin price goes down by half and hash rate goes down by half, then the value of energy presumably is no different, right? Because the hash rate just followed the profitability decline of mining. But for example, if Bitcoin price stays the same, but for some reason hash rate goes down by half or something, uh, most likely what can you assume? Well, if no miners are actually taking the place of whatever reason the hash rate went down, it's probably because of global energy prices, right?
Yeah. Okay, so kind of switching gears here. So you've been in the space for almost a decade now, for eight years. What does it take to be a builder in crypto, and what advice do you have for builders out there that want to get into the space or are just starting off in the space?
To be honest, just be technical, right? I mean, it's just it's pretty direct and clear, right? Like, learn how to code, probably Solidity. There's a lot of new things. I don't know. People say Rust on these new chains and stuff is good. I personally don't have too much experience in that area because I haven't needed to. But just be technical, both in terms of mechanism design, coding, and architecture, because the most scarcest asset in the space isn't actually Bitcoin or ETH. It's actually Solidity devs and
100%. Yeah.
Yeah, like people ask me like, hey, like like a blockchain devs, like, dude, they're either all like already insanely rich or working on their own thing or they're super smart. I don't think there's hungry like Solidity devs or something walking around begging for a job. Like when people ask me, I'm like, I don't even know the space, right? So
Yeah.
my advice is just to become a blockchain engineer.
Yeah. For sure. Like the best way to learn it is just to start building, just start doing, just start like getting into the code and stuff. I myself like started teaching myself how to code a little bit, trying to just get familiar with smart contracts. Like I kind of know like my own personal like learning style, and I know what I'm good at. I know I'm never gonna be a world class coder or anything, but being able to become familiar with the terms, like it's literally like it's a language. It's a smart contract language. Solidity is this language, and if you read smart contracts, you're gonna pick up on certain patterns and stuff, and you're gonna be able to recognize things, and that will give you a big advantage over other people that maybe aren't familiar with that. Also, something that's less hard is just using these DeFi protocols themselves, and or even simpler than that, just like holding Bitcoin and sending it. If you just hold it, in your own personal wallet and send it, like you're further than most people. So like anybody that wants to get out in the space, it's more just like actually going out and doing it rather than just sitting on the sidelines and stuff.
Yeah, 100%. I mean, same like you're saying, like just taking custody of your stuff, getting into it, and just teaching yourself is the biggest thing, to be honest.
Yeah. So outside of Frax, what other projects excite you in the space and whatnot?
I mean, there's so many, right?
There's so many. Yeah.
Yeah, obviously, what you guys are working on at Gelato is really cool, especially with the new Uni like V3 automated G unit kind of products. And I think just like a lot of DeFi protocols that I think are interesting. I really like these new things like Hawk Exchange, which is like an L2 kind of Thorchain like project. Some of our friends are working on like Polymer, which is still in stealth, so I don't know how much I can reveal that, but it's essentially kind of like a Thorchain like IBC. These things I think are going to be really cool to finally bridge the L2s in different chains.
Yeah, I think L2s and the bridges between them are huge opportunity, and still like it's new, but it's still unexplored, and I'm still, to be honest, learning about it, like the mechanics of how it works, and what is the best way to go about it and executing it. And it's kind of, you have to have this balance, between like how permissionless. I mean, permissionless, I guess, a bridge can be. Can you like go into, how familiar are you with like L2s and stuff? And can you like go into kind of like what you know about L2s and like the bridges between them? I mean.
Yeah, I mean, to be honest, there hasn't really been a full L2 really launched, except for hopefully soon Arbitrum and Optimism, right? Like Polygon is really cool. We're deploying a lot of stuff on there, but currently their bridge is like an MSIG, right? And obviously they're gonna build a lot of stuff, and it's gonna be. I'm a big fan, actually. I think Polygon is the first big project to not be antagonistic to Ethereum, right? And actually be symbiotic, right? But bridging is one of the most important things, and it always lags behind the actual on-chain tech. So I've actually been watching that space. Some of my favorite stuff is in this kind of bridging liquidity, bridging tokens, and things like that. And that's where I think a lot of value will be created. I think those tokens, algorithmic stablecoins, automation, those are kind of the big tokens to kind of accumulate during this kind of non-bullish phase of the market, so that during the next bull run, we're going to have outsized returns.
Yeah, I think right now it's definitely like very healthy for what the market is doing, like where we're at now, because it's all this stuff comes in waves, and like you said earlier, it's cyclical. Like there's a lot of excitement, new people get into the space, but when things increase in value, you attract a certain kind of person that basically have short-term goals and ambitions. And when things get rough, they're immediately out. But I think what's cool about each of these waves is, there are people that stay, and there are people that build, and there are people that, they stick around and they end up doing really cool things, and they bring kind of like a new perspective that maybe older people in crypto haven't thought of before. So it's going to be interesting to see like what comes out of this next phase of the market and crypto development, and what will be like the big thing that hooks people again.
Yeah, no, I mean, it's going to be really cool to see the trends, like you were saying.
Yeah. So we're closing in on an hour. We just passed an hour 15 minutes, which is actually pretty solid interview. Do you have any final thoughts? Any more scoops you want to give us at the DeFi scoop, or anything like that?
Well, I mean, we're working on some really cool stealth and semi-stealth stuff at Frax, so I'm really excited to launch the gauges recently. So that's my main scoop, is check us out and just look at some of the stuff we're building, because there's a lot of alpha hidden in between the lines.
Yeah, and one last question. So, both of us were at Everipedia for, and you still, are involved with the project. What's your favorite memory from Everipedia back in those days?
Honestly, there's so much, but I'd say probably sleeping on the ground, working 7 days a week, but with everyone, because we all lived together, right? And it was like a classic, Silicon Valley style, like internet startup life, which is I sometimes miss that, but I also sometimes don't miss sleeping on the ground. It was fun. It was it was very very memorable.
Oh, for sure. Like you had the ground, I had the top bunk in my room. It was just when I describe people what my time was like in early days of Everipedia, I say it was a mix between the Facebook movie and Fight Club. Like, because we were in the startup life, but we were all like so committed to it, working 7 days a week, just trying to figure out like what to do and like how to make it. And so like it's cool to see like how much you've grown personally, like over how long I've known you for like the past 5 years. And it's gonna be really exciting to see like what you do in the future, especially with all this stuff going on with Frax and beyond.
Thanks, brother. Yeah, I'm excited to see what you guys do at Gelato as well. Exciting times.
Definitely have some big stuff in the works at Gelato. But anyways, thank you so much, Sam, for coming on. This was a really great episode. A lot of great information here, both about crypto and even about economics and whatnot. So thank you for coming on, and hopes to have you on again soon.
Thanks, man. Take care.
You too.